Well, this video is supplemental to the last video I made for the day of November 19th, the trades I made on that day. And what I did was show the entry points and reasoning behind taking those entry points. And what I'll do today is, in this video, show the actual how that looked as the market happened, as it occurred in real time. And it's always helpful to see the same concepts as they apply in real time, so that you see that you can actually see it as they occur, to where these entry points can be made into the market. And as always, I'm trading the if you look up here in the left hand corner, this is the symbol for the NASDAQ E-mini, November 19th, 2019, and November 19th is the date down here on the bottom. And on the left side I have the 5-minute chart. I don't use that for entry of orders into the trade, and I'm using the 1-minute chart for the order entry form. And I can enter orders in two ways. I can enter directly on the screen with the left and right buttons on the mouse. So I've got the buy one stop and the sell one limit if I'm above the market. If I'm below the market, it becomes a limit order. So buy one limit, sell one limit. And I've set the bracket orders for 5 points on each side of the bracket, and I explained the bracket on the last video, which I'll included a link on the description of this video. I'll include a link to the last video, which explains everything, what my reasoning is for trading this market. And so I've got the buy brackets, I've got the target, the sell limit set at 5 points, and the sell stop set at 5 points. For the sell bracket, I've got the buy stop set at 5 points, and which is the stop loss order, and the buy limit is the target set at 5 points. So both directions on the trade, I'm bracketed by 5-point orders, and you'll see how that works. As I enter the trade, the orders are automatically set, and I could choose how to move the orders once they're working. And I can also, in the case of a target, the sell limit order or the buy limit order, I can just drop those when I need to drop the target, and just go with a trailing stop type trade. So that's how I have the bracket set up. Obviously, this is just trading from the chart, so I'm trading what I'm seeing occur in real time. But this is, if it was a real-time market, this is exactly how it would look if the market were live. In this case, it's a recording using the market replay software, which is easier to demonstrate from. But this is exactly the same way it would occur in a live market. So I've stopped the time right here at 7:29 or 6:29, which is the opening of the U.S. market, and which opens at 6:30. And you can see right here is what the overnight market would look like prior to the U.S. Open. The U.S. Open is always going to change character, because suddenly, if you look on the left-hand side over here, the volume will just increase up to over 7,000, and so the character changes as American traders start into the U.S. Session of the market. Right here, it's the overnight London exchange. So let's go ahead and start it going here. Where I can, I'll speed it up for the sake of time. And so what I'm thinking here is it's opening. I'm seeing it's down pretty good. The odds of that coming back are not as high, so I'm getting ready to sell, because it's got a good thrust down here. So this would be the 6:30 minute right at the opening, and I'm waiting. Normally you'd want to wait for a fractal to form, or the 1, 2, 3 formations that I was talking about. So it's just, you want to be patient and see what it does first. Oop. See, it's moving downward. It thrusts right back into the previous close, so it's got momentum. And as it hits 3 points, I can go ahead and lock a little profit in on my here. I want to stay away from the current action. But right there, I'm technically in a risk-free trade, because I've already locked in a little bit of profit, so it comes back and takes me out. It's disappointing, but at least I've put in a little profit there for broker's commissions. I'll just get it out of the way to normally you don't want to move the stop loss around that much, but I don't want it to get stopped out before I hit the target here. I'm just showing that you don't have to remain at risk at your initial stop. Initially I was $100 at risk, but I moved into the profit zone, so slightly more than $100. In real life you probably have slightly less because you're paying broker's commissions. So what we're looking for here is the next P3 point to enter the next trade. See, it's obviously in a good sharp downtrend here. Oop. Okay, so that's a P3 point. You don't have the luxury of stopping the market in real life, but that's why that market replay program is a pretty good tool here. What I like to see is when a decent entry point is made. I like to see it come back and get really close to that ADMA line, and then thrust back through the previous close. So I'm trading on momentum. And also, if you look at the 5-minute chart, we can see that the direction of the 5-minute bar is up, coming back through that ADMA line. And I want to make sure that that's coming back down when I enter the trade here. So that would be a P3 point probably, but I just want to be careful, so I'll wait for the next price bar here by P3. Okay, that's better. See how quickly that happened? That can be scary if you've entered a short trade already. So I'm waiting for it touched the ADMA line. I'm waiting for there we go, thrust down through the previous close, and that approximately mates on the 5-minute chart the bar falling back through the outer Bollinger Band here. So I'm kind of trading on momentum as it falls back through the open. That's a little bit risky because the ADMA line is curved up, but I'm anticipating by the time it hits my entry point, the ADMA line is coming downward, which it is. So at this point we've gone through about 3 points, so I don't think my trade needs to be at risk anymore. So just about the time I move my stop loss out of risk, it hit the target. So let's look for the next fractal. That's how quickly these trades happen. They're not very long at all. We'll just look for the next fractal to form here. Okay. So that's the first thing you look for, is a break above the, since we're in a downtrend, I'm looking for a break above the previous high of the previous bar. That's the first sign that it's making a new P3 point. And so let's let that, it's really hard to have patience. Once it hits the ADMA, the tendency is to just kind of jump on it, for me at least. But see how this bar is heading the wrong direction? We want to, ideally, we want it to come back, it to be coming back down and trading back through the previous close, so that we've got momentum at the time we enter the trade. We don't want to enter on these reversal bars, although you can. It's always much more comfortable to have it coming back down in the direction of the trade, because you don't want adverse movement once you enter it. So just be patient on this one. Whoop. I think I blew past my entry point there because I had it sped up. They're not that fast. Yeah, see, I wanted to enter it right here as it thrust back down through the previous close. So I'm going to be a little bit off in this trade. It's always risky because it's kind of shallowing out right here. You see it kind of bending upward, making that spoon pattern. So I'm always, in real life here, I'd be ready always to change my positions if I see it's coming against me. But once I get 3 points into the profit area, I'll start covering my I'll start taking away the risk out of the trade. Kind of doesn't, it's really resistant to moving towards the profit direction, but once it's in the trade, I'm going to go ahead and I need it to move down to about 3 points here, which is about right about there. See, 1, 2, 3, right about here. If it hits here, I'll go ahead and take my trade out of risk. The quicker I can do that, the better I feel. I don't like being at risk for very long. So right now I'm at a $100 risk, or a 5-point stop loss. Each point is worth $20, so that's a $100 risk right there. And I want to start locking in. Okay, so it's got a good solid move there, so it's hitting support. Some of them you just may take you out at the at your stop loss. But even if it took me out here and I only had maybe $10 to cover broker's commission, you know, that's still a successful trade. You haven't lost anything, and you're ready for the next one. So that's the general strategy anyway. So I don't like the way that's moving. It's so hesitant, so anytime you don't like something, you can hit the exit at the market button right here. And I noticed that the ADMA line is kind of angling inward here, and the Bollinger Band on the bottom here is bending upward. Those are usually signs of reversal, and so you got to be very careful when you see something like that. So basically, I want to see resumption in the or strong resumption in the trend direction here. Okay. I'm looking for a new P3 point. As always, can't trade until you get that first. You know, the same bar that makes a P3 point, it makes an entry. Some of the entries are like that they enter on the same bars that makes the P3 point. I prefer to enter on the second bar after the P3 point is made. Oh boy, I'm just going to sit that trade out right there because that Bollinger Band is bending upward too much, and that's looking really like it. That's the way it looks before a trend change. So I don't like to see this 80 MA angling into the 14 SMA line either. So that'd be a good trade not to take right there. I'll just wait for the next one. See how it's narrowing and constricting on the Bollinger Bands? Anytime you get that, red flags go up, and I don't like trading either direction when I get into a constriction area. Ideally, you want it to be the Bollinger Bands being moving out from each other. As you see here, they're expanding out. So I'll just, until I get a clear P3 point, I'll just speed it up. See, that would have been a good trade right there. I just really didn't know, just because of the way it was looking. But we see we've got a really strong downtrend here, which is the reason it's resuming that downtrend, because if you look on the 5-minute chart, that shows you kind of the real story of what's happening here. We just got a very sharp downtrend, as indicated by that 80 MA on the 5-minute chart. It's just really sharply moving down. So even though it paused there, hesitated, it's really still on a very steep slope. So you can actually look at the slopes of these 80 MA lines and make determinations based on the slope of the line. If it was flat and looking like it was rounding upward, that's a sign that it's changing trend direction. But all it's really doing there is just pausing and then continuing or breaking downward back into the trend. So I missed that trade, but it's good to be cautious, so I'm just going to wait for the next one here. Okay, see, this looks like a trend reversal. Now what I would need to see for this to be an actual trend reversal is I need to see a 1, 2, 3 formation, simply because this slope is so steep. And I see it's bouncing off the lower Bollinger Band on the 5-minute chart, but it's got a good ways to go, but I see it's not going to really change this trend all that much. And so I really suspect that this is kind of trying to con me into taking a long trade here, but I'm not going to fall for it. So no trades to the upside when you got a steep trend like that. So you stick to the trend direction, and generally that's going to turn out all right. See, if I'd gone long there, there's a good 1, 2, 3. You can make a little quick 3-point trade as it hits that upper Bollinger Band. See how that upper Bollinger Band's acting like a cap or a limit on the distance it's going to move. I don't like to see these bands on trend changes. I don't like to see them constricting or coming into the against the direction of the you're trying to trade. I like to see them expanding outward if it's legitimate. Okay, so yeah, see what I'm seeing here, I paused it for a second here. I think this is a point in the live trading. I recognize that we have if you see the last high right here, it's sort of a phantom minor high that I talked about in my previous video, and it makes a phantom swing here, a minor swing here, kind of a phantom high here, an inside bar here, and that would have been a good trade had I taken it. But this high is higher than this previous one, and it's heading back down into the intermediate trend direction. That tells me that I'm looking at a intermediate swing right here. So we've got an intermediate retracement right here, and a good bet is that is heading down into the back into the intermediate action swing. And if you look at what the 5-minute chart is doing, that close has head back down below the open, so it's moving in the correct direction. If I was looking at a candlestick chart, we're seeing that red candle increase in size after a long wick, so that it's traveled all that distance, and now it's moving in the negative direction. But I use the just the plain old bar charts because it shows me these hook formations a lot better. So I'm at the same time I'm looking at the 1-minute chart, I'm also trading what I see on the 5-minute chart here. So I can enter these with a right click on the mouse, would have entered that as well, but a lot of times if you're trying to capture momentum, just a straight buy or sell market order usually works for me when I'm trying to buy based on what I'm seeing in the moment, or buy or sell. So just I normally just use market orders here. Although if I see a breakout like of support, I might place a stop or limit order to enter the market. Just depends on what I'm seeing there. So let's wait for the next fractal, like always, or the next P3 point, I mean. It's always painful when you see a lot of movement that you didn't capture go by, but that's just the nature of trading. You know, you're not always going to get the fullest amount of each price swing. So here we've got a break above the previous high, so that's a significant sign, and we have it touching the ADMA line like I like to see. So that's a good indication. This might be a P3 point, or the next bar might be one, but I just have to wait for further development and just be patient till it's moving down in the direction I want to trade. Right here would be moving against the direction I want to go, so I just got to be patient to wait for to not trade on the reversal bar. Right here, it's moving too far away. I'm judging it by where this close is. I don't want to see it 1 or 2 points away from the ADMA line for an entry. I want to see it right on that line or near it as the next bar enters. So that's a good way of judging where entries might be not as desirable. Always try to enter it as close as possible to on the line, on the ADMA line here. Okay, I want to see movement back, and then I want to see a trade through my previous close here. And that's still moving up. If we look at the 5-minute chart, we're still bouncing off that lower Bollinger Band. I don't want to trade when it's moving back up to the 5-minute ADMA line. That might have been a missed entry here. Matter of fact, I think I did enter a trade on the live markets. I think I did enter right there. But as we can see, we've been in the trend for a fairly long time, and this ADMA is sort of angling inward towards the 14 SMA line, so I get extra cautious the older this trend gets. Oh boy. Yeah, I'm getting ready to sell here. See that? I think this is a P3 point. It's just taking its time. Very slow. See if I can get a little bit closer to that ADMA line for the entry there. Yeah, it's not a great entry there. Sometimes the software doesn't get you in on the market replay program where you click the click your entry order. See, this is where you kind of sweat when the market starts to slow up a little bit and it takes its time. And I know to stock traders who hold positions for a long time, this seems very quick, but you kind of get used to it hitting your target very quickly if your decision's right. So I can go ahead and take out the risk of that trade. So if it comes back and gets me out at $10 or so, I have to live with that. Better than taking a loss. So always try to cover take some profit there. That's kind of a P3 point. I don't like to see them even like that. I like to see a good. This is what kind of made me suspect this one a little bit, but I'd like to see a good a good solid obvious P3 point. I don't like to see them even on the it's like if you look back, there's a good sharp difference there, a good sharp point there, then it makes it, then moves away from that, but right here is kind of blunt, so that's hard to tell. I'm going to try to enter at the close because it's so close to the ADMA. If I get it closed, it's really close to that ADMA line. Can't really go wrong even if it moves against me a little bit. So I'll try to enter as close as I can. May have missed it. Another thing I'm looking at is ascending lows here, and this is still moving upward on our 5-minute chart here. That bar here is moving up. I like to see it start falling downward, and we look like we're bending upward towards the trying to cross over here. So always wait for this to play itself out, this reaction swing. You always want to enter on momentum as it's going in your direction here. So I'm ready to sell, but I need to see it fall back. So in this case, I'll use the previous open as my judge of where to go short here. If it falls back through it, there, seeing some momentum, a little bit of momentum there. I'm going to be really quick to try to lock in profit on this trade because I might not hit my 5-point target. So, but I got to see at least maybe 3 points before I move that stop loss. There we go. See how I'm locking in the profit there? Just barely beyond my entry price. So that's about $5 of trying to lock in about $5 of profit there. I'll make it. Let's make it 20 points. Okay. Whoa. Is that going to hit my target? I don't know, so I'll just get out. Better be safe than sorry. It looks like it's reversing on me there before it hit the target. There, it would have hit the target. Had I waited a little bit more. That's okay. So do the same process. Since we're in a downtrend, it's getting kind of redundant, but you just gotta, just look for the next opportunity, which is another P3 point. And so increase it speed here. Okay. That's not really a... Almost stopped it there, but that's really very shallow. But yeah, I probably should have... I probably missed my entry point right here. I don't know if I caught that in the live trades or not, but kind of made a little shelf right here, and you could probably trade the break below that little shelf. But I always like it when it hits that. See how it hit the ADMA line? I always like to see that same pattern. It kind of hits that ADMA line, then bounces into the direction of the trade, and that's my momentum through the previous close. So if I entered now, I'm about 3 points too late. So I'm just going to say I missed that trade. Probably would have. Okay, what did it do there? Again, I'm looking at what it's doing on the 5-minute chart. See how I I would prefer to see, it's so far away from that ADMA line that when it starts to reverse like that, I know there's a tendency, if it were to break above the high of the previous 5-minute bar, it's going to try to go all the way back to that 5-minute ADMA line. So when I see a move back up like this, I get a little bit cautious because I'm always looking out for possible trend change when the trend has become kind of long. So again, if I were to see a break above this, see how I'm always aware where that the highs of that, if that message box would just get out of my way there, the highs of this previous 5-minute bar are getting to be a long ways away from that ADMA line. Anytime I see that, and I see a tendency to break above that, it looks like a retracement swing on the 5-minute chart. And when it looks like that on the 5-minute chart, it'll translate to a trend change on the 1-minute chart. And so those are one of those little things that you can't really explain in writing. It's just kind of something you just become aware of. See how it's trying to climb upward on the 5-minute bar here. And I don't like where the entry price is right here. It's about 1.2. It would have to fall to the previous close here, which is too far away. It's really trying to climb. Okay, see, we got to break out above that high of the 5-minute chart. Odds are when that happens, when the 5-minute chart bars are so close to the lower Bollinger Band, the tendency is for it to climb all the way to the ADMA line here. Same thing if it were an uptrend coming back down. So you want to look for those kind of patterns, and sure enough, it's corresponding with a trend change here. This is why I think I took this trade in real time, even though we haven't really. See why that's kind of risky, because the tendency is to come back down and form a number 3 point. So yeah, that was kind of impulsive there. I don't think I'd do that in live trade. The only reason I did that is because I knew it changed direction at 7-Eleven. In live trading, I would have tried to get much closer to that crossover at the entry point. See, I'm about 2 points beyond where I wanted to enter that trade to the upside, as I'm above the upper Bollinger Band, and so it's going to have to break through that upper Bollinger Band, which is right about where the ADMA line is on the 5-minute chart. So you've got all these things to kind of gauge your distance here. So that would be considered a bad entry price. And usually, if you missed your entry price, the best policy is just let it go if it's not ideal. Otherwise, you have to wade through a lot of this reversal stuff like that. And anytime it's not in my profit area, I'm kind of sweating bullets, so you want to ease that pain as quick as you can. Here, I'll just reduce the risk right there. So now I'm only risking $20. And now I'm risking, I'm technically not at risk. And a risk-free trade at this point. I'll just get it out of the way of the movement here. I may get stopped out. Very close to stopping me out on that one. Move back. See how we're kind of chasing the ticker back up. So I'll just try to get 40 bucks out of this trade. If it doesn't hit my target. So now I'm looking for a number 3 point for a trade to the upside here. You can see how we're almost breaking past the previous high, and look how far that pullback is compared to the last move down. So that's a pretty good sign of trend change. Plus we've got a crossover signal. So now we're looking for a P3 point. I want to see it a little bit lower than this bar here before I enter a trade to the upside here. If it does move to the upside, it's going to take this Bollinger Band and bring it up. It already tried to come back, to balloon back out, so it's not really a constriction, it's just waiting for it to move back up, and it'll look like it's expanding outward, which is what I want to see here. I don't like how flat that is right there. I like to see a good spike down and make a P3. But yeah, it doesn't look like it's going to give me a good downward move. Maybe this was already it. Sometimes you can get into a trade right at the high of the previous bar, but it looks like it's going to go against me right here. So they're not all perfect entries. That's what you want to wait for usually first. You want to wait for that pullback to the 80 MA line, and then you want to enter it. So I got into that trade a little bit early. So 2 bad entries in a row here, which is not normally what I try to. Normally I'm better at that. I want to be more precise than that. So I'm going to do the same trick here, trying to lock in profit once I see 3 points here. I'll just go ahead and keep moving that, sneaking that stop loss up. Like I say, even if it doesn't hit your target, you never feel bad taking some profit out of a trade. As long as the quicker you get out of risk, the better you feel. Oop. See, now I can just sit back and relax because I'm no longer at risk. If it doesn't hit my target, I'll just do a trailing stop loss and take whatever I can below the low of this price bar here is where the support area is. Okay. All right. See, it's not the ADMA isn't quite bending inward yet, but anytime I see it's not. Anytime I see a large pullback like that relative to the other pullbacks or reaction swings, where the previous close isn't right on the ADMA line. See how the closes are down here, and we see the close here is way off the line, and so we're seeing a break below that with some thrust back into the ADMA line. And I want to let that play itself out. I like to see it, if I'm going to go long again, I like to see it go below that ADMA line and then come back out through it. Right here, I'm not buying it. You can see how you can get suckered in to thinking you might get another quick upward move out of that, but that's the trick. I know the games the market played too much, and what it's trying to do is sucker people into going long here when it's really going to try to move below that ADMA line. And if we're looking at the 5-minute chart, see how we really haven't crossed over. We're just kind of flat, but it could be making a intermediate high on the 5-minute chart before it decides to head back down into the trend here. So I'm really cautious about I see something like this. Yeah, see, at this point there was some doubt right here, but 2 minutes later, and there's no doubt, it revealed its cards right there. So I've seen it look like this and still move upward, but it's going to have to do a lot of convincing me to go long. There's going to have to be a lot of movement back into the trend direction. It's going to have to move back up through that ADMA line and start bending it upward and away again. So it is possible for something like this to resume the uptrend, but more likely than not, it's going to go into a downtrend here. So let's let that continue. I should let it go in real time here. See how by large pullback, here was the last move up from this P3 point. You notice the distance there. Anytime it moves back 50% of the previous move up and it's below it, it's almost taking out the low. If it were to take out the low here, that'd be a reverse hook. Definite short trade, but it's moved so far back, plus it looks like an imminent crossover. So at this point I'm looking for a P3 point somewhere up here in the new trend direction, because if that's not a reversal, I don't know what is. And see how this Bollinger Band is coming up, is shooting straight up, and anytime I see a restriction like that, I don't want to go short either. So I'm just waiting for this bar to move back up, make a P3 point, and then I'll move down. So this is probably a 1, 2, 3 high formation here, and that's coinciding with what I'm seeing on the 5-minute chart. See how we're seeing a thrust right back through the ADMA on the 5-minute chart here. We're pointed in the down direction on this 5-minute bar. This close is lower than the open here, so here was the up direction. Now it's moving right back through the ADMA here, so that's telling the big picture of what's going on there. And so I'm going to watch for a corresponding move on the 1-minute chart. So yeah, it's not fooling me. I'm too wise to its little games here. But this is sometimes the real-time speed. It just becomes slow as it's just like watching grass grow. So I'll just speed it up a little bit just to get through this. Sometimes these can go into a. Already I'm suspecting a trading range. See, I think that was our number 3 point right there. Yeah, this could be a very dangerous trade. See how it's so flat? It's flat, laying right on the 80 MA lines, right on the 14 SMA line. And you wouldn't want to go long here because you're trading right up against resistance here. See, that upper Bollinger Band doesn't leave you much room. There's about 3 points between the 80 MA line. Slightly moving below it, and so if anything, you would say the tendency is to go short here. If I see a thrust down here in the short direction, I'm also looking through it for it to fall back through the previous close here. And the Bollinger Band is starting to bend out. See how it's starting to bell outward? And the 80 MA is on the bottom side of that, so that says, okay, try a short trade, but that's risky because I could be trading inside a trading range right here. Here's support. So I'm going to be quick to. I don't even think I'll move my stop loss. I'm just keeping my mouse on the exit at the market button here. This is one of those things that might be a foolish trade, but see, we've got $700 right now, so you can afford to take a few of these risks. It's starting to slope downward. See, just by noticing these formations, I'm able to spot these trade opportunities. That's why you want to be aware of. Whoop, watch this stop me out here. Stop me out at one point. Yep. See, in the real world, that would have taken me out at one point as it touched it. There we go. I'm just going to get out. So that's $20 for taking a risk. Expand the view a little bit so we can see what we're doing here. So you see these formations happening here. There's a 1, 2, 3. It's likely an intermediate high. It's higher than this high, so that makes that an intermediate point. This low is lower than this low right here, so that's a possible intermediate low. So that means if we're looking, if this is a 1, 2, 3 top formation, we look for another swing up here and get an intermediate point up here, and then look for a move downward. Definitely don't want to be short right there. Combine the thrust to the ADMA line. See if that has enough momentum and get a few points out of it. Matter of fact, if it hits 3 points, I'm just going to exit. There we go. So that's a new number. That's a new intermediate low right there, lower than this previous low. In fact, I think what happened here in the live trading, I recognized that it broke through support. So you never want to enter a trade next to that Bollinger Band, but I'm breaking all kinds of rules here. See why you never want to enter. Don't do what I just did there. What I thought I did was because of my memory. I wouldn't do this in the real world. I remembered that it broke out at some point here. So I made a boneheaded short sell right there, thinking it was on its downtrend. But that's just the only reason I did that is because that's where I remembered that I did. But in real trading, I would never have entered that close to the Bollinger Band. In fact, it's going to move some distance upward to make a number 3 point here. So you see how you watch all your profits go away if you make a mistake like that. And the tremendous risk that I'm looking at here. So 1, 2, 3, 4, 5, 6, 7, 9, 10. So that's 200, around $210 risk I'm taking on that stop loss. That's only because I know what it did. So yeah, this was a dumb move. I don't know why I did that. That was impulsive. That was almost like my finger slipped on the mouse button there. In the real world, if I make a mistake like that, you just let your stop loss get hit and you take $100 loss and don't worry about it. But yeah, I moved my stop loss because I know it's gonna go short, just because that's what it did in the actual market. Let's just speed it up here, get the pain over with. There's a congestion area right here, and I know I took a breakout below that low. So yeah, talk about jumping the gun here. Horrible timing. This is the kind of thing I wouldn't deserve to profit on at all, but I'm just doing it for illustration purposes here, for what not to do. Okay, here's what I was seeing in actual trading. So I did see the intermediate high and the intermediate low. What I should have done is patiently wait for that intermediate 3-point I3 point to form, and then look for the breakout below the support here. But because I had a memory of what actually happened in live trading, I just said I knew it was going to break out below that low, but no way in the world would I do that under live market. I was just getting impatient with the demonstration, so I don't know what it is. But yeah, we'll just let it make its move. This is another thing that I did in live market that I'm not showing here, but I dropped the target and I just trailed the stop down. I wanted to show a trailing stop loss trade, but I won't show it now. But anytime you get in these congestion areas, don't try to trade in the range. Trade the breakouts of the range. You see all that support level right there? And I just jumped the gun because I knew the range would end. But the truth is, in the real markets, you don't know which side it's going to break out. That could have broken out to the upside, for all I knew. But because I had traded the real market earlier, I knew what it was going to do. So that's why I made that move. So forget what you just saw there, and I'll go ahead and continue with how to trade it right. Usually it's on auto scroll, but I took it off that because it tends to bounce around a lot. So there's the next P3 point. That's quite a distance from that ADMA line, but the steeper the trend is, you can get away more with trading off the line. Usually the times you really want to stick to trading on the line are when the market's sideways in a trading range. As the trend gets steeper and steeper, you can get away with after a P3 point, like right here. I could have probably entered a short trade right there, but you can get away with trading a little bit further from the ADMA line because momentum acts, the steeper the trend, it acts more like it pulls it away from the ADMA line. And even then, we've got this bar come back and touch it. if I hadn't been made that boneheaded entry right there, I was really hoping to show what a trailing stop loss looks like on this type of trade, and I missed that opportunity. But in the real trade, I actually made a really great trailing stop loss trade of, I think I got about 10 to 11 points just from this breakout here. Those are always really good opportunities if you just have patience and wait for them, and don't do what I showed there. But yeah, you can see how that's a nice profitable trend right there. And that's what usually happens with breakouts. You get these good, really nice moves. Okay, so we see that Bollinger Band really moving upward like that, and it's had a really long move back compared to the previous move down. Matter of fact, here's the really long moves down, and then we get kind of a stunning move compared to these other moves, and then it's the retracement or reaction swing is almost the whole length of this move down. So that's a sign of reversal right there. And plus we're bending the ADMA line in towards the 14 simple moving average. So and we're bouncing off, if you look on the 5-minute chart, we're bouncing off the lower Bollinger Band here. And it's heading back up to the ADMA line on the 5-minute chart. So you've got all these signals telling you red flag, reversal's coming up here. Wait for the thrust through. Don't always just take that. So a lot of times I've been aggressive in the past and just take the right at the crossover. Just take the trade right there. And that'll probably work out, but for new traders, I would just wait for that thrust to occur through. You don't need to take every trade. Just wait for it to establish itself in the new trend direction. If it's a real trend, it'll get established first. Again, you're trading into think of these like cloud cover. You're trading into a descending Bollinger Band. I never like to see that. I like to see them bell outward at the time of entry. So that looks like a 1, 2, 3 formation if it starts moving up from here. So the 1, 2, 3 bottom formation. Yeah, it's a double low, but you know, if it takes out that high here of the previous bar, I might want to be long. Because either one of two things can happen here. It could be a sideways market, or it could be a reversal into the new uptrend. A lot of times with the trend change, you'll get sideways trading ranges for a while, or where it's a pause, kind of like a pause, and the traders decide if they want to continue in the trend or if they want to reverse. You'll get some indecision in these areas. So what I'm trying to do is trade on momentum here. As low as that looks, it's still a breakout of the previous high, and the Bollinger Bands are kind of expanding outward. But I'm not expecting a real spectacular trade here, because of the ADMA line is so flat. You always want to see good, see how when it's really steep, the trades are good, but when they start moving, these lines start moving flat, it becomes really iffy. Very hard to make a judgment. You need movement to good solid movement in one direction or the other to make good decisions. When it's flat and sideways, it becomes unpredictable. Except that the 80 line is on this side of the market. We just had a crossover. That's probably a 1, 2, 3. I see that on the 5-minute chart, it still looks like it's bounced off the lower Bollinger Band. It's heading up towards the 80 MA line. It hasn't really made a number 3 here on the 5-minute chart. So a good sign would be a breakout above that previous high on the 5-minute chart, which is happening about right here. And usually you get a breakout of these high and lows act like miniature support and resistance areas. So this high would be a resistance area. Anytime you get breakouts of support and resistance, you get good momentum. Right here, just hit the resistance and it's kind of petering out. So that wasn't the most ideal place to go long there until I see you always want to let the trade come to you, let it establish itself. I'll just go ahead. Might as well just go ahead and lock in that profit. So now I've got $5. If it takes me out at $5, oh well, I'll just wait for the next opportunity. But at least I'm not at risk, theoretically. But you saw how quickly that moved down here. Just in an instant, it moved 5 points. Thankfully, I was already going in the right direction, but that's how quick it moves in real time too. For whatever reason, sometimes it'll just flash in one direction or another with no warning. But those are kind of rare occasions, but it does do that sometimes. I'm just going to leave that minimum risk in there until it hits the target one way or the other. It's either going to hit my target or take me out at $5. It wants to hit the target. Can't stand the suspense there, so I'll just speed it up. And once you know it, see how it's really constricting right there. There's no way I would want to go short here because I've only got a point between the Bollinger Band. It's just like narrowing down. It is moving down here, but yeah, that's really, there's no, until it starts moving into a trend one way or the other, it's really unpredictable when you only have that much distance either side of the 80 MA line. That's only a point. It's not worth taking that trade one way or the other there. You let it do what it's going to do first. That tells me the truth, what it really wants to do here. It had a really strong thrust upward, but instead of trying to catch that, I'm I'm just letting it speak to me, tell me what it's doing. I don't want to assume. See, that to me looks like a 1, 2, 3 pattern, and we've got a good angle upward now on the line. Bollinger Bands are expanding outward a little bit after a constriction. So that's a normal pattern. You can have a constriction like the waist, and then it starts to bell outward, and that's a good sign that we've got a good uptrend starting, even though you're not really getting a good P3 point. So that's the only thing the only caveat I would have, but I'm close enough to that ADMA line, which if it does make a P3 point, it's not going to hurt me too much one way or the other. See, a breakout above this number 2 point here would be a significant move. I'm also looking at a breakup back up through the ADMA in the 5-minute chart, which acts like resistance, so it's breaking through that ceiling there. And when I can, I'll move this up to get out of risk. This is when trading gets a little bit tough, you know, when it starts slowing down a little bit, and you just have to be patient. And even though it might wander around a little bit, just leave your target in there. And at this point, what I'll do, if I can get 3 points out of it, I'll just go ahead and cover my any profit, a little bit of profit, $5, and just let it do what it wants to do. It's either going to hit my target or take me out with $5 to cover commissions. You always want to try to cover those little commission costs, and then you never have a negative. You never have an overhead cost because you're always covering it. So right here is about, that'll cover the broker cost if it doesn't hit my target. Alright, so we just look for the next same things as we did with the downtrend. I'm just going to look for another P3 point. So after a while it becomes pretty redundant. I think I missed that one. If it holds around that distance from the ADMA line, I might consider that a double P3 or double bottom, and then try to take the break out of that close. Or if it just comes back to the ADMA line, I'll try to trade right on the line there. Nope. Come on. There we go. I know it's kind of flat, but I think this is the last trade I'll make. I'll just I think I've demonstrated enough, including what not to do. And too much longer in these videos always get kind of boring, but okay. I just want to go out with hitting my target. So if you want, you control your risk. So I'm really risking at this point only 20 bucks. Might as well go to risk nothing here. So at that point, if you move it up a tick or two one direction, you're covering your broker's fees. And so you're really at a risk-free trade once you cover all those costs. So right here would be an example of a trade that's technically risk-free. So it's either going to hit the target or it's going to hit my my small profit that I've locked in. So that's a good habit to get into in all your trades. Try to lock in any profit you can. And you can't go broke taking profit. So we've only been in this market for about almost 2 hours, and you can see we're up here at $1,150 just for following these simple rules, and they don't change much. They're the same trading rules, going down and coming back up. It's just a matter of knowing these formations and trading as close as you can to the ADMA line, and the odds are just highly in your favor. Even if I make some boneheaded mistakes, like let's say if I made that mistake in reality, suppose I took $100 loss, it's no big deal. It's not going to still $1,000 profit for the day. But that was only because I made the mistake. Anyway, I think this was good enough, long enough to make the case, and I've got a corresponding video that shows all the reasoning behind this trading of this market, and I'll include that description in the I'll include the link to that other video in the description. So have a good one. Have good trading.